Hello, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today. So, for today, we have just a bit of information that we're going to go through. First of all, to begin it with, we are just going to be going through a bit of fundamentals for gold to see what new information we have from the World Gold Council. Uh, Going into July, this is from mid-July, this is what we've had. So we are seeing here, following a small drop in June, gold posted a strong monthly gain in July to finish 4% higher at $2,426 an ounce. Another all-time high was reached mid-month before a modest decline into the month end. A strong Japanese yen rally, likely fueled by a carry trade unwind, ensured it was the only major currency in which gold did not gain during the month. According to the gold return attribution model, gold was propelled higher by lower 10-year treasury yields and a lesser extent, a weaker dollar. So I think the main uh, fundamental, especially this year, that's really playing out in the market is that we are seeing how the US dollar, much as it's still a reserve currency, of course, it has a bit of strength, but we are seeing some bit of broad decline in dollar denominated assets. We have seen that with the treasury yields. We have seen that with the currency pairs, the CFD currency pairs. Most of them that are trading in the basket with the dollar seem to be trading higher. So we are seeing part of that playing a part in that upside for gold. So they're saying here that a main negative contribution came from the COMEX futures, where an increase in open interest was larger than the increase in net longs, leading to a decrease in the ratio, one of our model inputs. Early August saw the third highest spike in implied equity volatility on the VIX on record as a confluence of factors, including a Bank of Japan hike, delivering, and a weak US employment data drove indices sharply lower. So, of course, again, guys, like I mentioned to you, implied volatility is still high. Implied volatility is just expected volatility in the future on equities. So that is still elevated despite the decline we have been seeing on the S&P 500 VIX. So essentially, we have quite a number of factors that are playing out. And I just want to speak about the Jackson Hole Symposium, which is also one of the main events that the markets are also looking forward to. Going into the month, the end of August, we are going to have the Jackson Hole Symposium, and we are going to be waiting for comments from Powell there on any kind of directions for US for the Federal Reserve policy. Now, in addition to that, after the Jackson Hole Symposium, we are going to usher in the FOMC conference, which is going to be happening in September. Soon after, we have the Jackson Hole Symposium. Now, it's saying here that some of the ground has since been made up, but a return to pre-sell-off exposure might take time. Now, they are saying here, this is from the World Gold Council, they are saying that a sell-off for gold might delay a bit. And of course, they are also indicating here that for the indices to continue steeper sell, I think it will still take some time, especially due to some of the factors that are currently at play. Now, going over here, we are seeing how gold has performed according to different currencies. So as you can see here, we have the US dollar, we have the euro, we have the Japanese yen, we have the pound, we have the Canadian dollar, we have the Swiss franc. Uh, this is, I think, that this might be the currency for India. This is the Chinese yuan. This is the Turkish lira, and of course we have the Australia dollar. Now, if you look at the prices at the next, if you look at this row here, it is showing the return on gold tagged to each currency. So you see, generally we have been seeing gold gaining ground against most of the different currencies. The only one that it has not gained ground against, or if you're trading gold XAU JPY, XAU JPY has been performing, gold has performed lower on this one, simply due to the recent Bank of Japan rate hike and that unwind of the global carry trade. But year to date, I think, as you can see, gold has been, presenting a lot of upside momentum. So what we are seeing from this report by World Gold Council is that it's indicating that generally year to date, we're having quite a bullish move for gold, and it's showing us that we're having more and more potential upside expected. Now, looking ahead, we have the Jackson Hole Symposium, and we shall be waiting for indications on where the Federal Reserve is going to do with policy. Especially from what happened on Monday after that broad sell-off on the markets. We expected that there was going to be an emergency rate cut by the Federal Reserve, but some of the Fed speakers came in and they indicated that that is not likely possible. And of course, the reason for that is because there was no urgency, and of course, much as there was a bit of decline in the NFP numbers that we got on Friday, they said that there is no cause for concern, and that data does not in any way indicate that the US is in a recession. Of course, the US is not in a recession, and for us to enter in some kind of a recession, we need two quarters of contracting GDP, which we have not gotten yet for the US. So we are still seeing some bit of upside momentum there. Now, secondly, of course, US politics is playing a role in movements for gold. The US politics, of course, we have a face-off between a potential nomination by Kamala Harris in the next Democratic Party convention. President Trump, of course, for him, he was successfully nominated, and he's going to be taking part as a Republican candidate in the next U.S. elections that's happening in November. Now, the other thing, of course, is we have market volatility. A market sell-off initiated by Q2 earnings disappointments from US tech leaders might accelerate in late August when NVIDIA, the AI darling, reports. Now, NVIDIA is supposed to report earnings on the 28th of this month. And that's really going to be the only, I would say, the only catalyst that would enable us see a recovery, especially on the Nasdaq. If we don't get that, then we are unlikely to see that move. Now, here we have the average cumulative gold return as opposed to the average cumulative US 10-year yield change. So you can see that actually gold has been steadily, it has been holding its gain quite nicely, and it's also showing us here that we're expecting a bit of unwind, especially going into the Jackson Hole Symposium. Now, quickly going down here, we have the presidential predictions. This is for now. Of course, Kamala Harris has already, Biden stepped down. Okay, and since Biden stepped down, we have seen that the likelihood of a Democrat candidate victory has also steadily risen, indicating to us that now there is a slight chance that Kamala Harris becomes the president of the United States. And we are seeing that prediction now. That's why we have this sharp move, especially from soon after Biden stepped down. So now it's a face-off between Harris and President Trump, rather, almost as if I've already given Trump the presidency. Yeah, face off between Trump and Harris. Yeah. Yeah, so this is essentially what we have. Just to really look at in summaries wise, it's saying here that August seasonal strength for gold might be influenced by some specific events this month, including the US election developments, that Jackson Hole Symposium, and NVIDIA's earnings call, which is going to be on the 28th of August, 2024. Our take is that these events will keep uncertainty high rather than providing any definitive resolution. The gold market might also get some support from Indian buying following the recent duty cut. The start of the Fed cuts is likely premised on normalizing economic data, while the employment report and the ISM data suppress the downside. Other data has to come in quite hot. Yeah, so again, guys, the ISMs, both manufacturing and services, again, did not really impress. The employment report also for last Friday really didn't impress, but the Fed is still indicating that there is no fear. We don't have to fear anything, and that a recession is also we don't expect a recession to come in. Now, I'm going over to ING Think, just to go briefly over a few things that they're indicating here in their recent reports. This is again on the ISMs. Let's just go quickly on what they're saying on the ISMs. So for the ISMs, we are seeing here that the US ISM non-manufacturing index has risen from 51.4 to 51.4, from 48.8 above the 51.0 consensus. New orders jumped to 54.4 from 47.3, while employment is back in a growth territory at 51.1. So again, for those of you that do not understand these ISM indexes, when we have a reading above 50, it's normally a good thing. It shows that there is a bit of growth in these particular sectors. But whenever the number contracts and goes below 50, it's normally not good. However, we base on trend. We base on trend to see how is the index performing based on trend. So from here, you can see the activity stroke production index is particularly strong at 54.5 versus a 49.6, while prices paid rose to 57.0 from 56. So these ISM indices, much as some of them have been dropping, they are still broadly above 50. And all this is indicating that we are seeing some bit of strength, but a slight contraction, but strength is still there. Yeah, so Fed to cut rates more swiftly, but market pricing looks aggressive right now. So again, the Fed has indicated that they are going to act in September, and the markets are not yet expecting an emergency rate cut. That's not going to happen. The last time we had emergency rate cuts by the Federal Reserve was during the COVID era. Soon as COVID hit China and have spread over to the US, the Fed actually acted quickly to avoid a much steeper downtrend in the economy. They had to cut the rates. Yeah, but for now, I don't think the rate cuts are going to come emergency. There's not going to be any kind of emergency for that. Okay, so looking at the economic calendar today, we don't really have that much. This week, I would say, on one hand, has been a week with not that much strong economic data. We've really been focusing mainly on price action for us to get movements within this week. Maybe for today, we've gotten some German CPI data coming out. The CPI for Germany still looking relatively strong. We have not gotten negative CPIs here. Maybe the PPI for China, which you know came in line with expectation. CPI increased, which is a good thing, indicating that there is a bit of steady spending, especially on the part of on consumers. Now, going over to Italy, Italy's CPI disappointed. That's on a month over month. Not that much of a reaction, however, on the euro dollar that is looking a bit unchanged as of euro session trading. So the markets are really choppy as of now. Now, in the afternoon, we are going to get employment data for Canada, and the main focus for this data will be looking at the employment change, where we'd expect a number above the negative 1.4K. And of course, if we also get a higher participation rate, that will, of course, indicate to us that the labor market is showing signs of stability, and we could potentially see a stronger Canadian dollar from there. Now, before we cross over to the MT5, I just need us to go briefly over gold from trading view. So looking at gold yesterday, one of the main catalysts for movement on gold is going to be the attack by Iran. Iran is expected to attack or to retaliate to Israel. And we have been seeing how the price action has been playing out very nicely on gold, where we saw gold holding those demand zones on the 4-hour time frame. We had a very, very sharp sell on Monday into this demand zone that we were previously in. That was on the 26th of July. We bought off and created a nice swing trade from this area to this high of 2,480. Sold back down on Monday into this same demand zone that we were at on the 25th. Bought back again. And yesterday we had almost like a double top that was created from Wednesday, rather a double bottom. And after that double bottom was made, we saw very strong volatility pushing gold higher. So gold is rallying because of the imminent attack of Iran. And there is also some bit of bullish bullish momentum that is present in this precious metal. So I'm expecting today, especially going into the weekend, we could see gold steadily moving higher, potentially going to this level of 2,435, where we could see it, breaking this level and moving even higher. So I would stay relatively bullish on gold, expecting it to move possibly to the upside there. Now, let's cross over to the MT5 and see what's going over on the other assets. Okay, we are going to start with BTC. Uh, we are going to start with BTC USD. So for BTC USD, if you check on BTC USD on the 4-hour time frame, I'm going to just quickly go over it. We had 3 liquidity grabs that have been created on BTC on the 4-hour time frame. I know we have quite a number of crypto bears, but crypto bears have been disappointed over and over again because every single time we dip, we keep buying. So this dip buying has allowed Bitcoin to stay elevated. And I have not checked on ETF inflows, but in any case, there was a headline actually yesterday where Morgan Stanley was indicating that they want their investment advisors to start pitching Bitcoin ETFs to their clients. Now, remember, Morgan Stanley and a number of these different asset management companies, a number of them, uh, a number of them have a lot of clients. Okay, so if they pitch the ETFs to their clients, we could get more inflows, especially in this quarter we are in of Q3, that could then allow Bitcoin to rally, possibly to the upside. Now, technically, you can see how we're having hesitations along certain levels. It has failed to break below 48,000, and every single time we sell, we immediately see buyers coming in. So there are a lot of order blocks along these levels, especially around that level of 50,000. 50,000, slightly below it, slightly above it. There are buyers seated there and they are waiting for any kind, they are waiting for any kind of buying at those particular zones. Now, going over to the Dow Jones, when we met on Wednesday, Dow Jones presented a very, very nice setup, what I can call a rising wedge setup for a sell. Played out very nicely, into the 8th of August. But we are now seeing we are seeing price action held along these levels here. And we are seeing a very nice recovery there on the Dow Jones. Now, what is pushing a Dow Jones higher is majorly deep buying. Institutions are still heaping up and looking for bargains on a few stocks, especially those that are recession proof, like the military stocks. You have there are certain stocks that normally perform well, even during times of recession. So we are seeing, some of those stocks recovering very nicely, and allowing Dow Jones to recover. Now, at the moment today, Dow Jones is still looking bearish from last week, where we saw it selling quite sharply, and it has not even yet gone into its Thursday price action. So I just want to monitor how we perform along these levels here. Currently, if you look on a 4-hour time frame, Dow Jones is also presenting to us a potential cross. For those of you that are keen, this cross looks like we are going to have a move of the 200-day going above the 50-day. Now, what that would mean is that if you're going in for trades, you need to go in for some swing sales on a Dow Jones and start looking to sell, because we might get some selling momentum going into this month of August, which has really just begun. We're just on 9th August, so we have just started the month and we should see some selling momentum coming in. For the next time we meet, I'm just going to monitor and see what this cross does. But it's most likely going to be a death cross that will allow us to see more selling. Now, going over to the Nasdaq, Nasdaq also has been presenting to us that similar setups like the Dow. We had a very nice rising wedge. We had a break below the rising wedge, and then we saw the market selling. But as you can clearly see here, we had a ascending triangle on this asset that has seen it buying. Again, observing price action, we would want to focus on how it has done from last week. So from last week, things are still not looking rosy for the buyers, seeing that we had a very sharp sell all through last week that we have barely recovered into. I'm monitoring into the US session. Key levels I'm looking for on the Nasdaq are these levels of 18,506, where I'm expecting us to potentially get a break to the upside. The other one is going to be this level here, which of course is on my Fibonacci retracement from this swing high. If we have a break of 18,500 on a Nasdaq, then I believe the next level for us to get to is going to be 18,700. Now, the other thing to look into, which of course we shall discuss more next week, is the CPI report that is due on Wednesday. If the CPI report presents us a decline on inflation, that's on the headline and core, we should see recovery for the Nasdaq, especially since Nasdaq trades opposite to inflation. When inflation decreases, the tech stocks always tend to perform much better. So of the two indices, I'll want to pick this one for a move to the upside. Now, going over to gold. Gold, I think I went over it on TradingView, so I don't have to repeat it. Let's cross over to GBPUSD. So GBPUSD, if you look at GBPUSD on a 4-hour time frame, as we discussed last week, uh, we first of all had a bearish flag on a 4-hour, broke below that bearish flag very nicely, but then we're holding price action along those levels there, okay, where I have my box. So we are seeing demand within this zone. Okay, there's demand within this zone, and going into trading today, expect to see a bit of choppiness to the upside, especially going into the US session. So I would be looking to buy GBPUSD at these levels for a potential move to the upside. In case it reverts back to move lower, the main target for sellers is going to be for us to break below this zone. So for now, I'm still looking quite bullish. Now, you notice that we still have an inefficiency here for the buyers that has to be, we could possibly have a slight move to come and fill this gap that we had on the 4-hour. But if the dollar index stays bullish, then I expect that GBPUSD will fail and will possibly sell back to this area here. Now going over to the USD CAD currently has a very nice setup on the 4-hour time frame where we are seeing a descending wedge. Descending wedges are typically patterns that form in declining markets, and they are reversal patterns. Whenever we see a descending wedge, we should always look for a potential buy. Now, as you can see here, I've marked my Fibonacci retracement around, okay, sorry, I added it, but let me just add it here. So by Fib retracement to this level here would allow us to see a potential move higher towards this area here of 1.38019, and this move all the way back here would allow us to see would allow us to see a much stronger USD CAD, and this would mainly be on the back of declining Canadian dollar. The reason why I'm also bullish on the USD CAD is majorly because the USD CAD, the Bank of Canada has been showing signs that they will cut rates more. They already cut rates. That was last month. We got a 25 basis rate cut. That was the month of July. Uh, and the Federal Reserve has not cut rates yet. So I would be looking to buy USD CAD possibly to that level. Now for Euro USD, when we met on Wednesday, I added Fibonacci retracement for Euro USD. Euro USD is currently holding demand within this zone here. Currently, the structure is looking, I would say, bullish for it. If you see how it traded in this area here, held demand there. We had a very nice imbalance candle there. There's currently some inefficiency here for the Euro USD. I thought we would have this gap slightly filled on a 4-hour. We haven't, and this imbalance is still there. There is still a bit of blocking of orders here, and the order flow seems to be supporting buyers at this pace. So if we fail to break above that 61.8% retracement level there, from my swing high to my swing low on the 4 hour. Then I suspect the next selling point for us will be from that fib level to this fib level 50% and even lower. So that's what I'm thinking for Euro USD. All right, so I guess that's it from my end. If you have any questions, now might be the time uh, for you to send in your questions so that we can go over them. Question time, guys. So if you have any questions, you can send them through and we can go over them. Hello, Apollo. Apollo, it's been a while. I hope trading has been going it has been going well for you. So Apollo is saying, please connect the Aspen conference versus the Jackson Hole Symposium. A latter is more revered, but former two has great economists. When are they happening? Now, I think that if the Aspen conference is an economics conference or an conference that has economists, I guess it could also have some good pointers for policy. But the Jackson Hole, when we talk about trading, we talk about the Jackson Hole because the Jackson Hole is for traders. Whatever they discuss there is not merely on policy, but more to trading. Okay. So the other thing, of course, so with Jackson Hole is Jackson Hole has not only Jerome Powell, but it also has central bankers. So you get most central bankers in one place, and that usually is what gives the Jackson Hole more weight and more. It also gives it, a bit of uh, confidence whenever you're looking for to hear from central bankers. You focus mostly on Jackson Hole. Yeah. So the Jackson Hole is going to be happening at the end of August. That's going to be, I am not so sure of the date, but towards the end of August, somewhere around the 24th to the 28th. And we're going to be getting comments from Powell from the Jackson Hole that could give us an indication of where they expect to go policy wise. Awesome. I think, guys, that's it from me. I wish you guys all happy trading. Someone's asking about EURUSD. Let me see if I can open up the EURUSD chart. Just give me a moment. EURUSD. Okay. So for EURUSD, one of the reasons that we have been seeing a steady uptrend in terms of policy, central bank policies, one of the central banks is hiking, one of the central banks is cutting. That's why we are seeing a higher EURUSD. So I would stay bullish on EURUSD. First of all, I'm seeing a golden cross here, indicating uptrend. The Bank of Canada cut rates recently, so that's why we are seeing a relatively stronger EURUSD. And for today, you might want to focus on to see whether it holds this higher low that it has just created here. I would potentially be looking for buys here. The structure is really a bullish structure here, and we are seeing that golden cross adding more confidence for buying. Now, the other thing, of course, to look out for is we have the employment data that's coming out today. If we get strong employment data for Canada, we might see a bit of a recovery there, but EURUSD is looking mostly bullish, and I would want to buy on the dips. Awesome. I hope that helps. Okay. Next question, guys. Where can we expect BTC to end bearishly? So for BTC, like I've mentioned to you, keep an eye. First of all, I need to understand, to answer that question, I need to understand really what strategy it is, rather what kind of trading you want to do. Are you doing short-term trading, long-term trading? Because this strategy, I want us to look at Bitcoin on the H4 time frame. for us to get a better understanding of which levels it keeps bouncing off from. So Bitcoin is mostly, I would say it's mostly a ranging asset. It ranges quite a lot on several shorter time frames or short time frames. So ideally, the approach to Bitcoin is you notice that within these levels, we keep buying. Now, for us to get sellers, we need to get into this zone here, below here. The sellers have to take out these areas here for us to see more selling. But you notice every single time we get a catalyst, like recently we had the broad market sell-off affecting most risk assets like Bitcoin, the indices, the stocks, all those are affected. We saw Bitcoin selling and we have deep buyers. So every pullback we get of Bitcoin is immediately bought almost within a day or two. So Bitcoin has a lot of buyers on the sidelines waiting for those dips. Now, for me to buy, I would want to buy within this area of 48 to 50,000 because that's where the buying momentum is. Now, for us to see a full solid buy for Bitcoin, we need to take out 70,000. The moment we take out 70,000, it's going to invite more buyers that will then allow Bitcoin to soar to 80 and possibly 90,000. Awesome. Guys, I think that's it. Thank you so much for joining me for today's snapshot. Yes, Patrick has mentioned that. Thank you, Patrick. Yeah, Patrick is saying that Jackson Hole is between 22nd to 24th of this month. Yeah, so keep an eye on the Jackson Hole Symposium for Jerome Powell. So thank you, everyone. I wish you all happy trading, and let's meet next time. Cheers.